Good morning, good morning. Hey, how you doing? Good to see everybody. Hope everybody had a good weekend. Hey, Raj, Travis. What's up, Mike, HB, Sniper, Kevin? Good to see you all. Hey, Ben. What's up, Sean? Good morning, everyone. All right. We're on YouTube now, Sniper Kid. Welcome, everyone. Hope you had a good weekend. We'll jump right into it. Hey, Jimmy Russell, good morning. Welcome to the folks watching on YouTube. And let's see what we've got. Now, yesterday I posted that we're looking for a move down, and that's exactly what we got. When a market does a high close on a Friday, it's very likely that we'll get what we call a backfill. What happens is prices get pushed higher. There's a lot of buying on a Friday going into a month end, right? You guys know that this week is month end. The last trading day of the month is the 30th, which is Wednesday. Month end is tomorrow, which is Tuesday. So we will have some interesting order flow coming in. There are quite a number of people that are trapped short underneath 54.65. If you look at the short-term inventory of the last couple of weeks, you can see that very clearly. You can see all of that inventory. That's accumulation, right? Accumulation in a huge range, right? And so if we stay above that 55.24 area, that's one sign that we're going to do this into the end of the month. Otherwise, if we get rotation down, we'll come back and we'll test 54.65 again. Okay? So here's your deal. If for longer term traders, if we get accepted above 55.84, be very careful shorting this going into the end of the month. Just manage your risk, okay? And if we do a rotation downwards, you're looking for support at 65 and then back into these lows here at 53.85. All right? So what happens is Friday you get a push up. Sunday night there's not as much buying, so the market opens much lower, gap lower, right? Because it opens all the inventories underneath the close. So what happens is they take the market up, create demand, and now they can sell that demand, that supply into the demand and cover those shorts. Anyone who's short on Friday in that late afternoon move, they now have the ability to go in and do some covering. So say, for example, you're a late day short and you're short over 55.44. Tonight you actually get to profit from that trade, do some covering. Does that make sense? This is called a backfill, right? The concept of the backfill happens not only on a 1 minute candle chart, right? So when a chart goes up in a 1 minute bar and then breaks back down and then does that, that is a backfill, right? The same concept because the business is always the same, just the time frames change, right? So let's go see. Overnight inventory is 100% short. All the trading, every single trade is underneath Friday's close. Friday's cost basis is above us. So what we're doing is we are letting the market sell off, but what tells you not to short it down here? Well, market profile shows us we have something called a poor low. A poor low is one tick of excess or less. So a double bottom or one tick, right? And what that means, let me move this. You see how there's just one little letter by itself there? That's a poor low. What does that mean? That means that buyers are competing at that low and you don't want to be shorting down there. There's not enough supply to fulfill the demand. When I period comes down here, there's a bunch of buyers, so the sellers, who are not idiots, raise price just like they did. So when overnight inventory is 100% short, you don't want to be shorting at the lows. Does that make sense? You don't want to be shorting where everyone's buying, right? It's just common sense. Use a little common sense in your trading. It's going to be a lot better. My balance zone is 55.17 half to 23. Double it to 34 to the upside. Double it to the downside to 55.06 half. VWAP is here at 27 and change, so I'll just go mark that off. And it's Monday, it's month end. We're just going to take it easy, trade the levels and the zones, and see what happens, right? So we have most of the night we were underneath VWAP. Now we're taking this inventory here. You see all this stuff here? And we're going to sell it above VWAP for profit. Okay? So the trades I'll be looking for using these zones. Well, when inventory is short, I like this trade. I like to look below and fail. This, when you look below 17 and a half and fail and come back up, you go long, you put your stop here, and that's your first target, right? So 17 to 22, that's a nice little trade. Now, I got to wait and see as it goes higher, what does it do when it gets up to 34? Because I'm not going to trade in the middle. Right here, the order flow is unpredictable, right? And if you had a gun to your head trade and you went long, your stop would be 28 and a half, right? We are in the front side of the move, so I don't see a short just yet, right? For a short, I'd want to look above 55.34 and a fail. So right now, got to be patient, got to be smart, sit and wait for the next trade. This way you don't overtrade. It's Monday morning. Only float. Do you know where I can learn spread trading? I don't know where you can learn spread trading. Yeah, I don't know. I don't know anything about spread trading. Oh, thanks, Leslie. One of the folks in the room says Option Alpha has good free options, educational videos about spread trading. Thank you, Leslie. Yeah, so you accumulate inventory and then you go sell it for a profit, right? 2 times, 4 times, 8 times, 16 times. Right? It's very simple. Very simple. So let's see if the levels work. If 34, if there's a seller, right? Now, why would the levels work? It's because at the top of a cost basis or a profit zone, there are less likely people to interact, right? So if I know that the average price is somewhere around 20, do I really want to pay 33? Yeah, kind of, eh, Raj? I haven't even looked at that. I haven't even looked at the old value area high to low. Yeah. So now let's see what we do. Now it's going to backfill. You can see that there's obviously a seller before 34, right? Can you guys see that? You can see that there's a seller before this level. They're right here. There's a space between that top candle and that line, right? So now you know the sellers are competing. Now, if you were a gun to your head short, which I really am not on a Monday morning, if I was shorting this level, my stop would be 34 and a quarter, and then I'd be looking for bids at 32, and then down here at 31, right? But I'll just sit and watch right now. I like to look above and fail because then I know that the sellers are engaging for sure. Here they're just kind of being a little, how shall I say, not cautious, but they're gentle right here, right? It's not aggressive selling here, right? You can see they're competing, but it's not in an aggressive manner. Because if it was aggressive, they'd hammer it down, right? But there is a seller there. And if those sellers see buyers, now they'll start to lift their offer higher and higher. The offer is the red line. So if you watch the offer and you watch a level, you'll be able to tell, right? Watch that level and then you go watch the offer. The offer will go back and forth above it. As buyers line up, think of this level as a glass door. And the sellers are on the other side. They can see buyers lining up. They will start to raise price. If they see sellers walking away, they will lower price to grab them. Very simple. Not something that people think about, but that's how it works. Can I expand on the significance of those levels? Sure. How would you like me to? What are you unclear about? Why I use them? Or Leslie? Hey, Sniper Kid, are you on Zoom? Are you listening? And for folks who are just joining the room, right? Just remember that if you're asking questions you're not on YouTube, let me know so I can type it out. Okay, no problem. I just want to make sure I don't ignore you or assume that you're listening, and otherwise I'll type it in the room. All right, offers are lifting. Sellers have seen buyers, right? No sense shorting it. Now, do you guys remember when I said I don't feel like shorting it here because it's the front end of the move, right? No problem. So there's no sense in me shorting a market unless there are sellers, and those sellers are competing. If the sellers are competing, price will be going down, not up, right? Overnight inventory is 100% short. It is correcting higher. Thanks, Leslie. You got insomnia again, eh? You're up in the middle of the night. Uh, Fortunately, I never have that. I never have that problem. I could sleep on just on a drop of a hat. I could go to sleep. All right. So what do I do if I don't have a trade going on? Right. Some people will take this as a breakout, and what they do is they'd wait for the market to kind of suck back a little and try and buy 35, and then put their stop underneath 34. You can do that. It's not an A plus trade. In this situation, it's creeping higher, so it might work for you. Why do you use those specific levels? Because it's the business. Sniper Kid, you realize that this chart is a sales chart, right? It's not random. Like the businesses of a market where you bring stuff in that you bought cheap. Like, you ever worked in a store? You buy your product for a certain price, you sell it at a higher price for profit. This is just a sales chart. That's why you use the specific levels, and that's why they work. Because you acquire your inventory at a certain price, and then you sell your inventory for profit, right? Does that make sense? It's actually really, really, really simple. And if you keep it simple, then your analysis is simple, and you can focus on execution. 246 in Kentucky. Of course, big traders sell their inventory for a loss. That's business, right? In what business are you always profitable? That you never ever lose money? Think about it. That's business, right? Sometimes business is good, sometimes it sucks, right? Now, Sniper Kid, I'm going to ask you something. Say you're the seller. Now, this is why retail traders never, ever get this, because they've never been the seller. I want you to close your eyes, Sniper Kid, and pretend you got 500 contracts for sale, right? And you're offered at 34, which means you've got them for sale at 34, right? The top of the box. Now, what if you can look down and you can see, holy crap, there's a ton of buyers. Wouldn't you want to increase price to get them to chase you and pay more? Think about it. And they are selling. Make no mistake, it's not like they haven't sold anything here, right? So if you got 500 contracts, at this level, you'll have 10 for sale or 20 for sale. And if they get sold, then you know that they're buyers. You'll have contracts out at every single price increment. So as the market goes up, it takes out your contracts. That's how you know whether or not you should be selling higher or lowering price. Does that make sense? I want you to think like a seller. Don't think like the prey. Think like the predator. Think like the seller. Don't think like the guy who stands in line for 7 hours to buy an iPhone. Think like the people who are trying to sell 1,000 iPhones an hour. Get it? That's the reason why retail traders don't make money, is because they don't think like they're in the business. They think like someone who goes into a store and just buys things, right? So as soon as you see buyers, you raise price. It's just business. What do you think, Dylan? What reasons would you look to hold longs if you're making sales? So for example, say you bought, okay, there's a little cost basis here, and there's a cost basis here underneath 23. So say you're long 100 contracts here, okay? Right? And you're selling 5 contracts at every tick, right? If they're buying your contracts, you can stay long. If they start, if this starts happening, get out of your contracts, right? If you see competition, get out. That's how big traders trade. If I'm long 100 contracts, I'll put sell orders out. If those sell orders get executed, I know that there is demand for my product. If those sell orders do not get executed, then I know that there is no demand for my product and I have to cue the music from Jeopardy. What do I have to do? Come on, people. What do you have to do if nobody's buying your product? There you go, lower price. Simple. Exactly. Put it on sale. Get it out the door. Turn that inventory into cash. That's what's going on right now with that little red candle. Little 1 minute fire sale. Now, in a market where it's trending higher and you put it on sale, that brings in buyers. What a concept. Yeah, it's gonna be a very interesting month end. I'll be doing my regular sessions, but I won't be around as much, just because I'll be moving over the next couple of days. So for the folks in the coaching class, if you really need me, just reach out. But otherwise, if leave your levels and stuff like that, and I'll just check over them when I can. Everything will be back to normal after Wednesday. Boy, this is untradeable right now. So this is another thing. When the market's doing this kind of thing, just leave it alone, right? That's distribution of this stuff, right? And it's very hard to trade these micro little tiny chop zones where the candles look like a barcode from a box of cereal. That is not. I do recommend that you avoid or trade less near month end, depending on your level of skill. If you're a new trader, you have no business trading around month end. Most people don't even know that it's month end or why it affects the business, right? If you're a skilled trader, fine. But if you're a trader who's just learning their setup, who's not good at controlling risk, who panics, who freaks out, who makes bad mistakes, who blows up his accounts, you should not be trading month end. You can do a lot of learning at month end. You can sit and watch. People don't like doing it, but sitting and watching and learning and observing how price behaves. Month end is a very strange time of the month because the large traders are marking their markets. What they're doing is they're cleaning up their trade blotters, their inventories, all of those things that you guys don't even know what's happening underneath. But it affects price action. And especially for people who just blindly overtrade, it's a horrible time. Because smart money, what they do at month end is they try not to lose money, right? Try not to lose the money they made that month. Dumb money pushes it at month end and blows up their accounts. Sniper Kid, you're off in the weeds a little bit. So, what are you trying to accomplish, Sniper Kid? Are you trying to go long? Do you have a trade set up to go long? What I suggest that you do is I suggest you watch the videos. We have a ton of educational videos, and you need to get yourself a setup. So you're not just blindly taking trades, right? You have a business reason to take the trade. So here, for example, right, this is a look below and fail. So you would put your buy order here at 18.19, right? So say you buy 19, you put your stop under 17 and a half, and then you put your sell orders out. Now, if the market takes out your stop, that is the risk that you take. So if somebody comes in and sells, you have insurance on that business transaction. Do you understand what I'm saying? That is a trade setup. The trade setup is based on the business. If the business reason for the trade does not exist, then you should not be in the trade. Okay? So that way you're not just randomly taking trades and hoping price goes up or hoping price goes down. So what you're waiting for On a long is you're waiting for the sell orders to be completed. When the market does the look below and fail, that means the sell orders under this level are completed. That is the business reason for taking the trade. The business reason is that nobody needs to sell under 23. If the business reason gets violated, you're out of the trade and you've paid your insurance. If you can't explain the business reason for taking a trade, you have no business taking the trade. Yeah, just running the stops, eh, Leslie, when London opens? Running those upper stops? I didn't even see the time. You need to get some sleep. You're overtired. I recommend traders learn to go long before they go short. Because you become a much better short seller by learning how to go long. Why? Because you get to recognize selling competition. Selling competition is the number one reason to short a market. So once you learn how to recognize that sellers are competing, right? You got it, Sniper Kid? Cool. Good, good, good. Beautiful. I love the light bulb moment. Yeah, learning how to go long teaches you how to be a good short seller. Because you know when other sellers are competing. Tempo. Yeah. Well, there is a trick, Sam, right? You could either watch the chart, and if it's kind of moving slowly, that means it's a slow tempo market, right? There's also another thing that you could do is you could open a time and sales, right? It's like a speedometer. And watch how fast the market trades. But why does tempo slow down? Tempo slows down when the flow of business slows down, right? And I wish Jim would say that, right? Yeah, no, the sellers are having a great time. Hey, Mikey, what's up? Right? So 1 minute chop means it's really slow. It's like a slow night in 7-Eleven. And you got that one hot dog going around the rotisserie, and it's kind of burnt. There's nobody coming in. You get maybe one drunk guy every 1 minute comes in and buys a Slurpee, right? It's just the flow of business into the market. That's all it is, right? Don't look at the color of the candles. Watch the offer. Don't look at wicks and twicks and wicks and wicks and all that stuff. Just look at the top of the candle because the top of the candle is all that matters. Okay? The top of the candle is where the sellers initiate. Okay? So right there, you know that we've got a seller just under 42, 41 and 3/4. Right? The next couple of candles, watch the tops. If the next couple of candle tops can't get over 41, those sellers have moved down here to compete. And when they move down here to compete, that's good for a short seller. And down here, and down here, and down here, and that the offer is moving lower. Right? Does that make sense? Just look at that line and that top and that top. Don't worry about the color of the candle or the shape of the candle or any of that stuff. Right? Just look. See, now the sellers have moved down. It's very simple. That's sellers competing. That's what you want when you're a short seller. No, no, Mike, we don't show. I'm just trying to show you. Don't touch anything. No, I'm just trying to show you behavior, right? I wouldn't short here because it's not even in the middle of the zone, right? I'm just trying to sell it when the offer starts moving lower, right? That is, if you're in a short, that's good. Now, when the offer starts taking out these levels, that means that the seller sees buyers and they're lifting the offer. Very simple. See, look, that's a backfill, folks. That's a backfill. You go back and you fill in. Mike, you know what a backfill is, right? You know what a backfill is, exactly. So when we have these tiny little backfills, we're still in the front side of the move. That backfill is just like dangling the string a little lower to get the kitten excited, right? So you take price up, you get the kitten involved again. You take price up, get the kitten involved. Bring price up, dangle the string a little lower, right? And then boom. Hey, Chris, how are you doing? Long time no see. Yeah, so they're just backfilling the move up, Mike. I wouldn't look for a short until here. I wouldn't look for a short the way it is right now. I'd look for a short, a look above and fail of 55, 56, and that would entail taking out the overnight high, or a look above and fail of the overnight high. I would just leave it alone right now. That's why I like the edges, Mike, because you trade from the outside in. I don't like trading from the inside out. You don't know which way you're going. Yeah, where is the gap, Leslie? Oh, it's up here, isn't it? Good. It's the thing about Globex. You never know what the hell's going to happen. Oh, thanks, Luke. I really, really want to try and help traders not trade at the wrong time. It's so easy to trade at the wrong time if you don't know when to do business. Right? Here's another backfill. As we get close to that overnight high, the sellers are front running it, right? So they're front running it here. Oh, nice work, Adam. Yeah, you don't have to use TPO, right? It's it gives you a couple of things really quickly, right? Done for the month, beautiful, smart. Take the money and run, and enjoy. Go to the beach or something. Yeah, you know. Yeah, make your money and then just take it easy. That's why we do this. We do this so we're not a slave to the chart, right? We do this so we're not a slave to the chart. Oh, my pleasure. I'm sorry to hear about your dad. My condolences. Let's see if we where we slow down on the selling. It's a little backfill again. This is a 2-minute backfill, right? Put it on sale for a couple of minutes and let's see if this brings in buyers, right? So you're always thinking, when they put it on sale like this, right? They took it up to 44, 43. They ran out of buyers. So now we're chasing those buyers out of the store. Come back, come back. Don't worry, I'll give you a good price. Now, at this 36 level, they seem to stop selling before, right? Right here. Do they stop again? That's because there were some buyers lined up here. See? If they're still there, they'll stop selling and reverse price back up. Now, I know this isn't really tradable, but at least this way, if you understand what's going on, right? When I was selling flow, oh, see, I did something very different, Adam. I sold stock, right? I did a very different job. My job was to help insiders liquidate massive stock positions. So if like a group of 3 or 4 people took a company public, or if one of my smaller funds did a financing on a company, say a stock's trading at $10, right? We short it down to maybe 6, 7, and then my guys finance it at 3. So they get their paper at 3, and then we run it all the way back up to 15, 16, and they sell their stock, right? That's how people make money. Yeah, like you don't, like we never pay retail for stock, right? So it's very, very different than selling options, order flow, and stuff like that. That's all above my pay grade, right? That's all above my pay. My pay grade is, okay, you guys have 150 million shares. Okay, we're going to take, 18 months, 2 years. We're going to build a market. We're going to bring retail in, and we're going to sell 100 million of those shares, 120 million of those shares over a 2-year period. And how hot is the deal? Now, if the deal's not so hot, we open it at 20, 30 cents and take it up to 80 cents. Try and get it up to a couple of bucks. If it's a good deal, a hot deal, maybe we open it at 80 cents, take it up to $5, $10, right? Whatever we can bring in buying and start slowly selling stock, right? No, this has nothing to do with market making. I used to give the market makers order flow. So I'd call the market maker up, and because I had a number of different companies I'd be working with, right? So on one stock, like say it's like ABCD is the symbol. I'd call up the guy at Citadel and go, hey, ABCD stock, I got an interest, show me bids, right? So this is how it works. I'm an offshore seller, right? I'm an offshore seller. The account's located in Switzerland or the Cayman Islands. It routes through Vancouver, BC, and from Vancouver it goes to Jersey City, right? So Citadel will call me up and say the stock's $1. He'll go, JJ, I can pay the bid for 100,000 shares. So I go, great. I sell you 100,000 shares at 97 cents. The market maker makes 3 cents. That's an offshore give up. So he makes 3 grand just for calling me, right? And that's distribution of stock. Now, my sellers don't care that I paid the market maker 3 cents to show me the bid because the stock's $1 and they paid less than a penny for it. So it's all profit. That's what we do, right? I'm a wholesaler, right? I have large blocks of stock that I'm looking to dispose of. On the other end, what I'm doing is I'm working with the company and the promoters to design campaigns to induce you guys to buy the stock, right? Markets are created. Do you think everybody just wants to put in new cupboards and countertops, right? And redo their homes? It's all programming. Now we're on sale. I think we're going to take out that 36. There's nothing wrong with that, Adam. It's a complete. There's different kinds of businesses, right? Finance is a huge business. There's block trading, there's securities lending, there's settlement and clearing, there's all sorts of different ways you can make money in finance, right? There's IPOs, there's, uh, you know, all sorts of stuff. Options guys and derivatives guys and bond people, you know. Just think of it as a big market that you go into. One guy's selling spices, the other guy's selling, you know, oranges. It's like a huge, massive market. Yeah, you'll find your spot. Just take it nice and slow. Right? Retail trading is the hardest job in finance because you're out on your own and you don't have any support and you don't have capital. That's that's the problem with retail, right? It's hard, right? Okay, little commercial here before we go, before we keep going. If you're tired of trading alone, we've built something for you here. The Trading Syndicate is our private room. We do live lessons, process tracking, XP rewards, and access to serious traders, no BS. If you're looking to scale up, we've partnered with the funding firms like Apex, Tradeify, Take Profit, pass your evaluation, and trade their money, OPM. Use our links in the description. It supports the stream and it gets you in the door with real upside. Thank you for the commercial interruption. Let's get back to it here. See, it's very, very... Look, see how we just came and we looked underneath that level? Those bids are still there. All these little buyers, they're all just waiting there. So the sellers come down, they look through that glass door, pretend that's a glass door. Oh, there's buyers. Let's raise price. Man, when I was 18... Actually, Adam, you're doing pretty good at 18. When I was 18, I was working in bars and living the life of Raleigh. Last thing I was doing was trying to make money. I was just having a good time. Same at 21. I didn't grow up till 25, but I had a good time. Right? So good for you. You'll be retired by the time you're 30. Right? Yeah, it was the 80s. Yeah, we didn't have the internet, right, Leslie? And thank God they didn't have cell phone cameras. Dear God. Oh my God. Thank God those things didn't exist. So this time the sale lasted a little longer, right? See, usually you put it on sale for a couple of minutes, couple of minutes. This time we had to put it on sale longer down here to attract buyers. And there is a seller here. Right at that candle, there is going to be a seller. There is an exact reason. It took time to bring in buyers. It just took in some more time to bring in buyers, that's all. No, not a liquidity issue. You're waiting for more buyers to come in so you can raise price. That's all it is. That's all it is. It's really simple. Right? Lots of buyers, raise price. Not enough buyers, lower price or hold it steady until you bring in enough buyers. Mm, you're young, you'll understand this. This is like holding a lineup outside the nightclub. This brings in buyers, right? That price stability brings in buyers, okay? And then right here, we said that there was going to be a seller right here. Look, there they are, right? So now we're just going to trade in this little box until more clients come in, right? We're just going to do this until we have enough people to do this, or we have to mark price back down to VWAP, which is down here, right? It's just commerce, folks. It's just commerce. All they're trying to do is they're trying to sell as much as they can, as high as they can, for as long as they can. And then when the market gets knocked back down, buy it all back, right? Here we're selling, think even if you take this, we took in goods here, we're selling it here, okay? Now when people get tired of it, we'll buy it back here and then do this again. Right? Now, what if there's no buyers there? Well, we'll take it back down, right? This is the original cost basis. This is distribution 1. This is distribution 2, right? And then we'll come back down here, and if it's really bad, we'll just bang it back down here, buy it all back, and then do this again, right? There you go. That's pretty much it. Yeah, that's all I was. I was just a liquidator. So I worked the system to make a stock look really pretty so you guys come and buy it so we can sell hundreds of millions of shares. And overnight inventory is still short. I mean, we are still correcting higher. So now we know where our bids are at least, right, folks? We know that we have bids here at 36, right? And then, of course, there are bids at VWAP. Let's see if VWAP has changed. Sure it has. It's probably gotten dragged up. Yeah, it's up here, right? There's VWAP, and these are the standard deviations. Thanks, Kev. So we're kind of slowly grinding up. Let's see if we take out that 44 top, and then that would put the overnight high as a target. Gosh. I like Sierra chart for TPO. It's annoying to learn, but once you use it, it's the best. You can't beat Sierra chart for TPO. But like I say, there's only about 4 concepts from TPO that you really need. One is the poor high, poor low, competitive buying, competitive selling. The other one is the concept of single prints, right, which is like a short position or a chunk of supply during the day, right? If they're right? And then really quickly knowing where the cost basis is, right? Because really, very quickly you can show, let me just get rid of all the drawings here, right? You can really quickly see the inventory. The inventory is the blue stuff. So you can see all of the inventory is here. And now we are selling that inventory here for a profit, right? That's really simple. That's all you need to know. We got a poor low in the overnight, which means buyers are competing at the overnight down here, right? So it just really quickly tells you the distribution of inventory, right? It's a sales chart, right? Things like single prints tell you when people are trapped long or trapped short, right? And that's really it. Everything else isn't really going to help you that much when you're in a trade. You know? The main thing is how much information do you need when you're in a trade that is actually useful, right? How much information is actually useful when you're in a trade? There's a lot of information out there, but how much of it do you really need? And how much of it is noise that's going to keep you unfocused, right? You really don't need that much. Yeah, balance zones, a little bit of common sense, right? Sprinkled with a dash of humility, right? The best money management, risk management, capital preservation comes from humility. If you don't understand what's going on, don't trade it. That's simple. Sit, watch, ask other people, you know? Reach out to us if you can't figure it out. When you work in the business, humility comes pretty quick. You know, what did Michael Lewis say? He goes, as soon as you pat yourself on the back, the next it's followed up by a swift kick to the you know what. Yeah, it's creeping up nicely. Yeah. That's the thing about retail trading. You can't cheat. You cannot cheat. And there's no way this is one of the only business there's like you can't fake it in this business. You can't. Right? Good trading should be nice and boring, you know? It's nice and boring. Make a little money, relax. You know, and those of you who want to go further and get on prop desks, we can help you with that as well, you know. So we cater to all kinds of traders. You know, we cater to the ones who just want to make a living, and then, you know, if you're the caffeinated crowd, we have a room for you as well, you know. Not missing much here. We're going to shut this down, and I am going to go pack. I will see you folks at 9 a.m. Eastern Time. Thank you so much for being with me. Come visit us at the Trading Syndicate. Give us a month, and I promise you'll learn more in a month with us than you will in 10 years anywhere else. And I mean information that you can actually use to make money and build your business. Thank you, everyone. Be safe out there. We'll see you in a few hours. Bye for now.